Hello everyone. With great pleasure, I bring to you a conversation around HDFC Business Cycle Fund. The NFO starts on 11th November and closes on 25th November. Today we have with us Mr. Rahul Baijal, who will act as fund manager for this fund. Hi Rahul. Can you explain to us what is the HDFC Business Cycle Fund all about?
Sure. So the HDFC Business Cycle Fund is a thematic fund which aims to invest in businesses which are in the cusp or midst of a favorable business cycle and avoid businesses which are about to enter or already in a down cycle. And by doing so, it's going to follow a dynamic approach in terms of allocations across various businesses and across various subsectors and sectors. And therefore, it's going to be a very agile product. And since a lot of flexibility is there with the fund manager to invest across various businesses and not be static at any point in time with a fixed set of businesses. Therefore, I think it's a buy and hold product. It can be an SIP product because there's a lot of flexibility built in terms of how the FM can manage the product.
Thank you. So in your view, what are business cycles? Just for the basics.
So typically, business cycles are characterized by four phases. There is a growth phase, there is a peak phase, and then once those two phases are over, typically you see businesses entering a contraction or a slump phase. So these are the typical phases of a business cycle, and you monitor the various phases through certain parameters like volume growth, acceleration, how the pricing power changes for the businesses, for the various companies, capacity utilization trends, and even sentiment, how the promoter sentiment is and how the business sentiment is changing in the sector.
So, when you say business cycle, you mean cycles of the business and not the economic cycle, am I correct?
Yeah, so I mean, if you look at our ecosystem, there are multiple cycles in play. You have an economic cycle at the background, you have a local economic cycle, you have a global economic cycle, and then you have a market cycle in which we operate in terms of valuation cycles and sentiment cycle in terms of bull and bear phases. And then you have businesses which are operating in their own cycles. So typically in this product, you will be focusing more on the business cycles, but fully wary of the backdrop in which those business cycles are operating, keeping the economic cycle in perspective, both local and global, and the other cycles I mentioned as well.
Thank you. Can you help us understand business cycles maybe via an example?
Sure. So I'll give two examples, one of a local business cycle and another of a global cycle. So if you look at the capex cycle in India, we had a very strong private sector capex cycle between 2003 and 2010. We had about a 40% growth in that phase. Then for the last 10 years, till about a year back, we had a sluggish phase where the private capex cycle growth was only 4%. But last 1 year, we are seeing signs of pickup in various sectors and subsectors linked to the private sector capex cycle, and it looks like we're entering an upcycle over there. So this is one example of a local cycle. Globally, if I look at the pharma sector, if I look at the US generics industry, it had a strong upcycle between 2005 to 15. Then it peaked around there. And since then, we are seeing a contraction in terms of various parameters, whether you look at pricing power or volume growth across companies. And you had a multi-year downtrend for the last 7 years. So it's still in a contraction phase. So I think that's another example of a global cycle which many Indian companies are exposed to as well.
Thank you. So now that we've understood what business cycles are, why does business cycle investing make sense?
So I think business cycle investing makes a lot of sense because you're basically focusing on understanding position of various companies within their own business cycles, and therefore your ability to forecast how the future will evolve in terms of how businesses will evolve is far better. And in terms of positioning yourself ahead of the curve, I think this particular style of investing helps you build a portfolio which can position itself in companies which are about to enter or already are in a business upcycle. And also, like I mentioned before, this will keep changing from time to time. So you keep monitoring the various business cycles and have agility in moving from one set of cycles to another. So I think a combination of this gives you a lot of confidence in forecasting ahead, in positioning yourself ahead of the curve, and also have agility in the portfolio.
So, Rahul, can you explain to us the investment strategy for HDFC Business Cycle Fund?
Sure. So the key tenets of the portfolio strategy will be as following. It's going to follow a blended style of top-down, bottom-up. In terms of portfolio construction, it will have a blend of both secular as well as cyclical stocks. And more than 80% of the portfolio will be in companies which are in the midst of an upcycle or about to enter an upcycle. And avoid the companies which are in a down cycle or about to enter a down cycle. So there will be sector deviations versus the benchmark, which will be reasonably wide because you're focusing more on businesses which are doing well. But at the same time, it will be diversified in terms of number of stocks as well as market cap curve. It's going to invest across the large cap, mid cap, and small cap. So those are the few tenets of the investing style that will be followed.
Thank you. So does this also mean that you will be taking very concentrated bets, and how would you manage risk within this fund?
So like I said, since you're focusing on building a portfolio around businesses which are in an upcycle, there will be some level of concentration when it comes to choosing the sectors and the subsectors based on the business cycle views. But having said that, those deviations will be reasonable in nature. And in terms of managing risk through diversification, diversification will come through that. Diversification will also come through number of stocks, and diversification will also come through the market cap curve, which I mentioned.
Sure. And I believe a bit of the downside risk is also protected by the fact that we have a very strong research team that backs you.
Oh yes, I think the strong research team with their long experience, having worked across the sectors for more than 10, 15, 20 years. That's the range of experience we have. And I think the depth of the coverage also, as we have explained in some of the case studies in the presentation. So when you're working in a collaborative manner with a team which has seen these cycles over the last 10, 15, 20 years, the ability and the confidence to predict the future also in terms of positioning clearly gets much better.
So Rahul, how would you think this fund would be different from some of the other business cycle funds that we see that are present and available for investors?
So broadly, if you look at the peer group, most of the peer group is more top-down in approach, whereas our product is a blend of top-down and bottom-up. So it's a very fine balance between how we are looking at top-down and bottom-up when it comes to building the portfolio. I think that's the key difference.
Now that I have you here, Rahul, I would love to know your views on the Indian economy and the market outlook going forward.
So as far as the economy is concerned, I think if you look at what's happening globally, most countries in the West are about to enter a slowdown or already are in a slowdown. Next year is, depending on which estimates you believe, clearly we are having a sharp deceleration in growth globally, especially in the West, next year versus current year. Inflation is a problem more in the West. I think if you look at India, we have about 6-7% inflation for a 5-6% growth economy, which I think is a much finer balance. So I think India looks like an oasis in the desert, if I can call it, when I look at next year. So we are in pretty good shape on a macro basis, and structurally I think the growth story in India remains very good. And that's one reason why I think India will remain one of the favorite emerging markets for the foreign investors to invest in, if I look at the next 3 to 5 years. On the markets, on a short-term basis, I think if you look at the last 1 year, YTD, We had a fairly prolonged and deep corrective phase, and I think a lot of the macro concerns around inflation, interest rates, geopolitical risks are priced in. My sense is in the short term, we'll remain in a consolidation mode.
So Rahul, who do you think is this fund suitable for? What kind of investors should look to invest in this fund?
Sure. I think this fund is suited for anyone who's looking for medium to long term kind of investing. And like I said, this is a product which will invest across multiple business upcycles at any point in time. And the fund manager has the flexibility to keep rotating in terms of which cycles to focus on. So at any point in time, it will be invested across multiple businesses, multiple sectors, subsectors, where the view is positive. And therefore, I think it will be adequately diversified when it comes to businesses and even number of stocks. And like I said before, it's going to invest across the market cap curve. So it will have a combination of large cap, mid cap, and small cap. So while being a thematic, since it's investing across the spectrum of businesses, I think it can be a buy and hold product and an SIP product because of the diversification inbuilt in this product, and there is no restrictive sector or is going to focus on.
Rahul, thank you so much for your time today. It was a pleasure understanding this fund, the intricacies of the fund. As we all know, HDFC Business Cycle Fund NFO opens on 11th November and closes on 25th November. My best wishes to you to manage this fund going forward, and thank you for your time.
Thank you so much, Siddharth.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.